One view of yours, which I know you've held for a long time, is not dislike for banks, but you don't find compelling enough reasons to own financials. Mm-hmm. I mean, if you do a poll amongst market participants, I mean, 95% of market participants are bullish financials, right? They are India-facing, they're domestic economy-facing. Economy does well, banks do well. So, what keeps you away?
So let me narrow it down to lending businesses, right? Okay, I have nothing against them. It's not that we don't dislike them, but if you approach the subject like we do, so there's a liability side and there's an asset side. Liability side is banks. Asset side is they lend to a host of other industries, right? We like our position on the other side of the balance sheet. Okay, but let's look at what's happening in financials or banks, in banks, etc. Yes, they've got a very high correlation to GDP growth, but what's happened over the last 3 years, okay, and what's happened in the last 3 years is that the economy is done well. It is not necessary that these banks are all profitable. Okay. So this year, you've got a bounce back in profitability, and all of that has come because lower credit costs. My sense is credit costs is going to be a part and parcel of what you will see in 2023, 2024, 25, 26. You have to provide for higher
You're saying problems on the asset quality front are coming back?
It will always be there. It's not going to disappear. It's not going to be. It's always going to be there.
No, but you're saying there's a fresh cycle coming? Is that what you're saying?
I would be very surprised if the quality of the banking balance sheets remain as they are in 2023 year end.
23 year end.
Okay, 23 year end, you'll have a great looking balance sheet, but I'll be surprised if that balance sheet will remain as pristine as it is in 2000.
As solid.
Yeah, and also remember in banks, it's not a spectrum of banks that are doing well. It's narrowed down to the top 2, 3, 4. So now you're down to stock picking in that sector.
Sure.
So look, it was 2015 pharmaceutical picked up, then it was down to stock picking within pharmaceuticals.
Yeah.
Right?
Yeah.
When you had infrastructure peak out in 2008, okay, you had to go down stock picking to make money in that sector. So it was not volume of profitability in that sector moved significantly higher.
Right.
So I'd be careful.
Careful. Fair enough. What else interests you? IT is a large sector, right? Which has been kind of bombed out because of what's happening. Does that interest you? I mean, that qualifies your 52-week low criteria.
Yes. But they're still up almost 80% since for the last 3 years, right? So they've done extremely well as far as these businesses are concerned. And they've done so because everything's gone in favor of these companies. But what has not gone in favor of these companies is obviously their cost of manpower. I think all of that is getting addressed right now. So valuations are the best that are much better than they've ever looked before. If you go back to that database of IT companies out there, you'll get someone who's available at a 10% cash flow yield. You'll get companies available at a 5% dividend yield. So yes, value in that segment at a 52-week low in a number of those names is emerging, and it's emerging rapidly.
So you got them on the screen now. You're watching. Have you bought anything there?
So there are two large contributors to urbanization. One is information technology, and the second is financial services. Okay, and they are predominantly down south and some part of west, and probably a little bit in the north. That's predominantly how urbanization has taken place. And if wage increases remain higher than nominal GDP growth, the consumption pattern in those certain areas could be extremely robust.
I have a feeling you're leading to real estate.
It's the biggest part of your balance sheet.
Right.
Okay.
So play IT. You already are playing this IT-led salary increase boom through the real estate space. Is that what you're saying?
Yes, I think one of the bigger part of everyone's balance sheet has to be real estate. I mean, look at your personal balance sheet.
Sure.
It's either real estate is either on your balance sheet side, or you're paying a lot of rent for it.
Yeah. It's either way big.
It's either way large.
Yeah.
So if you go down the consumption basket, it leads.
Yeah.
Okay, and then obviously a lot of other industries.
So
come.
real estate, indirect play on IT, but IT also getting cheaper and more interesting rapidly, as you said, right?
Yes, there is pockets of value in that business, and it's not going away.
Not going away.
It's not going away.
Kenneth, the other space is consumption, and you own a QSR company in your portfolio, you own a liquor company in your portfolio, so you like that space. I mean, urban consumption, really. Just sort of explain that to us.
I think we're just coming back on the fact that the urbanization will pick up a lot of pace at this point in time, and you just have to get companies with and the sense that we just get companies in the right format, with the right expansion plan, and with the right cost structures. Okay. So one of the biggest cost structures, I mean, if you look at most of the QSRs, one of the biggest cost structures is royalty payments.
Sure.
Okay. Yes. So if you can actually align a portfolio to take that 5% to 7% cost out, you probably got a business which does have the pricing advantage compared to everyone else. And these businesses are free cash flow. They got their marketplace. They're free cash flow. All expansions are through their own cash flows or through their own balance sheet, and no dependence on any external resource. So we're in infancy in that industry, and globally that industry has become significantly large. So there will be an expansion of that one particular place, and it could get reasonably large. A similar thing with the alcohol beverages companies. Very consolidated place, enormous barriers to entry, both in terms of distribution and making the product price available. So all of these companies come in with their individual structures, wherein it's extremely difficult for competition to come in and
Disrupt.
And disrupt that business.
Take away market share.
So if you can get all of these at the right price points, you go back about 3 years and all of these were there. You go back to IPO stages, and when these businesses corrected, they were all there. I think you just have to wait your time on all of these companies, accumulate large amounts, and just wait for them to monetize it all.
You own a urban waste management company as well. Is that a? I mean, there are very few plays on that theme. If you want an exposure, is that a? I mean, you want to talk about that briefly?
So for me, if I have to bracket that company into a particular economy within the country, it will definitely go in line with the consumer economy in the country. Why? Okay, why does an urban infrastructure company get categorized as a consumption business? Because simply put, the higher the per capita of the city gets, okay, the more the municipality will spend, or more the authorities will spend on social infrastructure.
Right.
Right.
Hopefully.
No. That is always a underlying demand that will always be there. It is water, waste, and sanitation. It is definitely there. And you've seen this happen. You've seen this happen in all underdeveloped economies to a developed economy, right? And these are the three places that are there. And I think if you look at the Indian context, large concentrated pools of individuals into smaller island cities or cities, the need for infrastructure like that to build out is the demand is far ahead of.
But this is also a lot of interaction with governments, municipalities for that matter, local government bodies. I mean, is that a risk at all, or that's a risk you're willing to take given the opportunity size?
So, how much of that is factored into the valuations is what you need to check. And if it's available at a 10% cash flow yield, what's the problem?
Got it.
Okay. So what we do from an investment process is we actually look for the reasons why others do not want to invest in, the reasons why these companies are available at that pricing, and once they establish that the inverted comma growth cycle, we monetize that holding.
This is not about what you invest. One more question, like banks, what you don't invest or don't have too much exposure is local manufacturing. Why doesn't that find larger share in your portfolio, Kenneth?
So local manufacturing, every business that we have has got domicile manufacturing in India.
I mean the capex theme, right? I mean
So let's look at where the capex is, right? No, the capex is happening in steel, it's happening in chemicals, it's happening a little bit in infrastructure, which is purely domestic. It's happening in pharmaceuticals. IT is putting in an expansion plan. So every time that you talk about capex opportunity happening is in industries which are outwardly looking. Right, we are surplus steel, we are surplus chemicals, we are surplus, or look at the capacity in chemicals, it's all coming outbound. You look at the capacity coming up in IT, it's all outbound. You look at it from pharmaceuticals, it's all outbound. In two-wheelers, it's all outbound.
Sure.
Okay, so from a domestic context, okay, I think it's probably a decade where India goes out with its companies or with its entrepreneurs and establishes a fairly large footprint and market share globally.
Got it.
Right? And the opportunities exist. Today, the opportunity exists because the world's largest manufacturer is stepping out of, or trade reallocations are taking place.
Sure.
So, if all the Indian companies want to sell all the cotton yarn in India, there is no market.
Right.
If the amount of fabric that we produce and want to sell it all into the Indian market, it doesn't exist.
Right.
Okay, so that's where the bias is. So if capex is there, capex is coming because these front-ended businesses have to create their markets abroad, and it has to be profitable for them to reinvest in their economy, into that public. So I think that's what's leading our thought process, and on that extent our portfolio construction.
Kenneth, thank you so much for being with us here on the program, and let me wish you and your family, your team, a very happy Diwali from all of us here.
Likewise, Prashant, it was lovely being here. Wish you, your team, your family, and all the viewers a very, very happy Diwali.